Hi and welcome to this video. My name's Aran Curry and I just wanted to share with you some thoughts about what's happening right now with the property market, what's happening right now with the mortgage market, and what the potential impact is on you as an investor, and what I'm personally doing as a result of that, and what you may want to do as a result of that. For those that know me really well, welcome back. For those that don't, I've got over 200 properties. I've been investing in property for 22 years now, makes me feel old. Educate over 100,000 people a year, and I've helped my clients and investors to buy, oh gosh, I don't know, with our done for you service, over 1,400 properties that we've sourced for them and built portfolios for them over the last decade actually. The reason I'm saying this, and I'm buying in this market right now, I'm buying right now in this market lots and lots of properties. So the reason I share all of that is just so you get a feel. I'm not somebody that once bought 5 houses and I'm now telling you what to do. I'm in this marketplace. I've been in it for a long time. Now, the challenge you've got right now is, in my opinion, the media. It's not what's happening. What's happening needs addressing, but it's the media. And if you're listening to the media, if you're watching the media, right, if you're reading the media, you've got a problem. I've seen articles recently that say the property market will potentially drop 30%. They've taken someone's quote that says it'll drop between 5 and 30. And 30 is when someone says, what's the extreme absolute categoric worst, right? Which, by the way, is a nuclear war, isn't it? A nuclear bomb dropping on the country. So that'd be like saying there's a nuclear bomb potentially going to drop on the country, which they also like to say, don't they? Right? So potentially dropping 30%, right? It's not going to drop 30%. That's just literally a headline to sell the paper. I've seen an article recently where they said fall throughs have gone crazy. The number of deals that an estate agent's falling through have gone absolutely crazy. Did you know that over the last kind of 12 to 18 months, because solicitors are so slow, because mortgages are taking so long, right? Average fall throughs for estate agents have been 29%. That's a fact, right? Do you know what? They've gone up to 30%. So yes, they've gone up, right? But they've gone up 1%. But that's now a headline. And by the way, where that headline was, down in the small print, it was written like it's gone from 29 to 30. So they could justify the headline, right? But I mean, that's a tiny increase in fall throughs. That's a tiny increase in fall throughs. I'll give you another couple of examples and then we'll get into the meat, right? So you may have heard about the property market in July. In July, the newspapers started saying that June, year on year, had fallen massively. Like we were up in May, 13% year on year, but June was only up 7% year on year. And that was a dramatic fall, right? What happened in June 2021? What happened? The stamp duty thing was coming to an end, wasn't it? Where they gave the massive stamp duty perk. The end date was the end of June 2021, right? So everybody was scrambling to get deals done. People were paying far more for a house because you bought the house for more. It saved you the money on the stamp duty. So to still be up 7% year on year on that meant the prices were still up significantly. They didn't point that out, of course, right? Or in September, right, they were saying, do you know what? August was terrible. August was down 1.5% on July, right? Every year, August is down on July. That's totally and utterly normal. Did they point that out? No, no one had even bothered to check that, had they? Or that wouldn't send a headline. Of course, it's down in August on July. More people are on holiday, less people getting deals done. I mean, that's not rocket science. Anybody can get that. The point I'm making, listen, you've got to understand the data yourself as best you can. And you've got to stop listening to the media because it gets people in a swirl, gets people in a panic. My VIP members, right? These are people that spend £18,000 to work with me for 18 months and get this done. I guarantee they'll be on 50 grand a year within 2 years, right? They're not in a panic. They're not in a swirl. Why? Because they understand what's actually happening in the market. And this video is about that. I just want to share some data with you so you understand what's happening in the market right now. So let's think about mortgages first of all. Okay? Start of October, end of September, right? The base rate jumps, then the government make all these announcements. And of course, right, there's a bit of panic. There's going to be. So of course there's a bit of panic. Now, if I'm a mortgage lender And I'm not sure whether the base rate's going to go up half, a quarter, 1%. I'm not quite sure what else the government might announce, right? But I'm lending money today, like millions and millions and millions of it. Would you carry on lending millions and millions and millions at the current rates? Or would you go, do you know what? Actually, let's take a pause for a couple of weeks. Let's just take our products off the market and wait, and then we'll reprice and put them back in. Do you know what was fascinating? I was speaking to a real good friend of mine just a couple of days ago. And do you know what happened in that period? Do you know what happened? All the banks, the BDMs from all the different banks, they met at a massive conference they were having anyway, right? All that they were doing was waiting for the high street to reprice. Once the high street knew what was going on and they repriced their products, the others all slip in behind in the places they normally want to be in the places they're used to being in. They slip in behind, but they're waiting for the lead banks to reprice their products, right? Throughout that period, the banks are calm. The banks are calm. This is totally different to 2007-8. In 2007-8, there was a crash. Why? The banks ran out of money. The banks ran out of money. They didn't have money to lend. There was a liquidity problem. Do you remember people queuing, a rush on the bank? Is that going on now? Absolutely not. This is totally different. This is literally just a repricing issue. It's a repricing issue. And why wouldn't you wait and reprice to get the price right? Now, there's a couple of things on pricing, by the way. Did you know at the moment you can get a 2-year fixed and it's more expensive? You can get 5-year fixed at the moment that are cheaper than 2-year fixed. That has never happened. That's never happened. In my 22 years of investing, you've never been able to get a 5-year fixed for less money than a 2-year fixed. Why? You go speak to the banks. Why is this? The next 2 years are going to be a bit chaotic. The next 2 years, the rates are going to move around a little bit more, right? The next 2 years are a bit more uncertain. But how sure are the banks that things will settle down? Because if they price at 5 years at a certain price, they have to hit it, don't they? Otherwise, they could lose a lot of money. They're really certain that things will settle down. Otherwise, they won't be pricing a 5-year fix below a 2-year fix because the consumer doesn't expect that. But they're happy to price the 5-year fix because they believe things will settle back down again. The war in Ukraine might reach some kind of settlement. The energy prices with the caps and the support from the government coming will settle back down. Inflation, they believe, will settle back down. Now, their economists are probably a lot more smart than the person in the media that's just writing an article, right? Or the everyday person. They understand they've got to get their pricing right, otherwise they lose billions. So for me, if a 5-year fixed is cheaper than a 2-year fixed, that's a great indication to me that the banks are calm, that the banks don't see this as a long-term problem, it's a short-term problem. And therefore, I'm not going to see it as a long-term problem. And when I invest in property, I do it for the long term. Listen, if you're looking to flip property, if you're buying to do up and sell on for a profit, you need to know what's happening in the next 3 months, in the next 6 months. You need to be able to read that market. Now's not a time to be doing that, in my opinion, right? But if you're in it for the long term, right, then it's not an issue, is it? Then it's not an issue. If I'm in it for the long term, which I absolutely am, we're going to complete on about £2.5 million of property in the next couple of months. Yeah. I'm buying over £2.5 million of property in the next couple of months. And by the way, we'll keep buying month after month after month after month. I'm always buying in this market. I'm always buying in all markets, right? Warren Buffett says, buy when others are fearful. Warren Buffett also says, right? He also says it's time in the market. Time in the market that's important, not timing it. Some of you are waiting for it to hit the bottom. You've said it to me. People have said it to me. They've even said, I'm going to wait for the market to go down, right? I know a few, in fact, hundreds and hundreds of people that have been waiting for the market to go down since December 2020. Many of my properties in that period have gone up 20, 25%, some of them 30% increase. And then if the market goes down 10%, they'll go, look, I'm glad I waited. Right? And I'll be going, well, I'm glad I bought because it went up 30, went down 10, I'm up 20 on where you are. Right? What if you wait now and it goes up another 5 or 10 and then it falls 5, right? Then have you bought at the bottom? And by the way, what I always say to people, how will you know it's the bottom? How will you know it's the bottom? Oh, well, I suppose the papers will have started reporting it's going back up. So you're not going to buy at the bottom. If it comes down a bit and then goes up a bit, you're going to buy as it goes back up. You may as well have bought as it comes back, as it comes down, right? This is crazy stuff. Why wouldn't you want to get in? Why wouldn't you want to buy in this market where other people are fearful? So it means you can get in more easily. Here's something I want you to get right. As a property investor, you win either way, right? If this is house prices and this is rents, cash flow, right? Early 2000s in London, house prices going up, going up, going up, going up. So people say, do you know what? At 2007, 8, it's more expensive to buy than to rent. I'm going to rent. What happens? Rents were already going up, but they go up faster, 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 right? And house prices steady or a little drop, right? And then about 2012, people go, hang on a minute, this is crazy. It's more expensive to rent than to buy. I'm going to buy, right? So rents carry on going up, but they steady just a little bit. They go up a bit more slowly. House prices start ratcheting up. We get to 2019-20, not because of COVID. In London, it was already pausing, if you understand the patterns, right? Not because of COVID. But anyway, it's already pausing in 2019-20. People going, it's more expensive to buy than to rent. I'm going to rent. And rents start booming. Surprise, surprise. What I want you to get, look at my hands. It's not a seesaw. It doesn't smash back to the bottom again. It's a ratcheting system. It's a ratcheting system. So as an investor in it for the long term, right? If house prices going up, and of course I want them to go up, it's critical they go up. I can refinance, release money, buy more. Refinance, release money, buy more. I love it when they go up, right? So, but they're either going up, or if they're not going up, the rental profit is, and the guest booking figures are increasing, right? And now you charge more on that side and make more cash flow. You win either way. You win either way. So if the market does drop or stays flat, you're winning on cash flow, right? And if it keeps going up, you're winning on it keep going up. Now, by the way, I'll come back to what I think is going to happen, because I think in the Midlands and the North, it's going to keep going up. I think it's due to go up for another 2 to 5 years, depending where you are, depending on that pattern. Don't take my word for it, by the way. Go study, go on Land Registry House Price Index. That's where all sold prices get stamped. You can see data, right? Decades, decades, decades of data, right? And you can see the pattern. You can see the pattern where it goes up, it steadies a bit, it goes up, it steadies a bit. You know, London's steadying. It's been steadying since 2019-20. Of course, different boroughs are slightly different. They go at slightly different paces, but it's been steadying. Yeah, you get 4 to 6 years of steady, right? You get 8 to 10 years of boom. 4 to 6 years of steady, 8 to 10 years of boom, right? But how long's Newcastle been booming? How long's Birmingham been booming? They've not had their 8 to 10 years yet. They're still now. I don't have a crystal ball. I can't give you any guarantees. This is not a promise. This is not a guarantee, right? But they're still rising. They're still rising. By the way, right, if you think rates are getting expensive, right, they're unbelievably cheap. The base rate's ridiculously cheap right now. I know it's increased quite a bit based on where it was, right? But people my age were people a lot younger than me. Listen, before 2007, 2008, the base rate was consistently between 5 and 6%, the base rate, right? They believe the new normal will be about 3%. They've said that for the last decade, right? Now, I believe we'll overshoot that. Of course we will, right? With what's going on right now. But again, the markets are telling us it'll resettle back at around the 3% mark. I don't have a crystal ball. I can't promise you that. But that's where everybody believes, the key economists believe things will settle. People that work at the Bank of England believe things will settle, right? Now, if that's the case and where they'll settle back to, that's ridiculously cheap still compared to that 5-6% marketplace, right? But your properties need to work at 5 and 6%. Yeah. And they do if you buy the right houses. If it's going to be a problem for you, what's happening? It's because you're buying the wrong properties. It's because you're buying with the wrong rules, right? You're not using the deal analyzers you should be using. You don't have the skill yet to buy the right houses in the right place. And of course, you can go to cash flow strategies. There are strategies where you make £10,000–12,000 a year from a 2 or a 3 bedroom house or a flat, right? There are strategies where you buy one property and make £30,000 a year. Profit, these are profit numbers, right? So you can switch to a cash flow strategy if cash flow is important to you right now. People have been able to make really great cash flow from buy-to-lets. We've been spoiled. I've got over 200 of them. I've been really spoiled, right? But I don't expect it to be normal. When that base rate moves, it costs me thousands of pounds every time it moves, right, per month. But that, I don't worry about it. I can't control it. Doesn't stop me buying more though. I want in the market, because the more asset I have, when the market goes up, the more money I make, right? So stop focusing on the fact it's going up. Focus on how incredibly cheap it still is compared to what it used to be. How incredibly cheap it is to borrow money and to leverage a portfolio and control more asset. It's crazy. By the way, just a last thing on prices, right? And inflation, right? I'd like inflation to stay high. Not for the everyday populace. It's horrendous. There's a lot of people struggling because of where inflation is at. I don't want it to stay high from that point of view. Of course I don't, right? But just talking selfishly for one moment, if inflation stays high, it means inflation's high. When inflation's high, house prices go up. People remember vaguely, right? They go decades ago, the base rate went to 12 or 15%, right? They forget to tell you it went to 15% for 3 hours, right? But it did stay just above 10. But you know what happened? The 2 years where it was just above 10% base rate. Do you know what happened? House prices went up 35% one year and 33% another year because inflation was so high. Things were booming like absolute crazy. And if you think things are going to crash, you've got to get around people that are in the know. I was having dinner just this weekend, right, with a developer, and I mean a serious developer, okay, built things like, right, like the Trafford Centre, right, like Media City in Salford Quays, for example, a lot of the quays. Did you know in Manchester, right, in the last 3 years, there's been 20,000 flats built. 20,000. Now, bear in mind, normally 2,000 to 3,000 new flats go up. There's been 20,000. They've all sold or got rented. All of them. All of them. Okay. The market's booming. But here's the thing, right? Flats and apartments, the price increases are going up less. You don't want to be in flats and apartments. I say that anyway. When I'm teaching you to buy property, I tell you not to buy flats and apartments, right? Houses are continuing to increase. Do you know what's happening right now? Developers have taken a pause. For the last 3 to 6 months, they've seen this coming. People in the know have known this is happening, right? So in the last 3 to 6 months, developers have taken a pause. They've not stopped. They're not shutting their businesses, but they've taken a pause. They're building less houses. They're building less property. What does that mean? That means supply and demand. There's less property available. So even if there is some people going, I'm panicked, I might wait, I'm not going to buy right now, and they're going to pause, right? There's less supply available, okay? I believe personally in the Midlands and the North, we've got another 2 to 5 years, depending where you are, of house price growth still to come, right? It follows the pattern of London, right? It's a few years behind London, depending where you are, how many years behind you are. So I believe that that market will keep growing. I can't promise you that. I don't have a crystal ball. I could be wrong. I also believe if I am wrong and it drops, it's not going to drop 30%, 20%. Since records began, the biggest drop, right? The biggest drop over any 2-year fixed period you choose was 11%. And people go, oh, it dropped this much here, or it dropped this much here, right? But over any 2-year period, right? They're forgetting that, you know, if it goes up 10% one year and goes down 10% another year, has it dropped 10%? Arguably, right? But it hasn't, has it? An historian would look back and go, it was relatively flat there. It just went, shh. And those massive swings were because of the bank's liquidity. That isn't going on right now. That isn't going on right now. So I want you to get right. Developers are pausing. That means there's less stock coming to market. That will underpin this market to some degree. There's loads of other factors. I could speak for a long, long time. The point I'm making, listen, the point I'm making is the banks are saying 5-year fix. They're saying they believe things will settle down. Okay. The base rate being at 3 or 4% is not actually an issue if you buy the right properties in the right areas with the right deal analyzers, with the right percentages. Right now, some other people are panicking that are not getting this training, that do not have this understanding. So the opportunity to buy with discounts is available. The opportunity to pick up great deals is available. Me and my wife Layla will be investing £8 million, right, for deposits and buying properties and refurbishing them over the next 3 years. Why? Is that because we're stupid? I don't believe so. We're doing it because we believe it's an awesome market to be buying. This is a great time to be buying property. Okay. And underpinning all of that, if you really wanted to protect your cash flow position, if the base rate being higher means there's not as much profit and you're wanting to make good cash flow as well as the long-term asset growth, if you want to make both, then if that's the case, then listen, you can learn cash flow strategies. You can go out and learn cash flow strategies that will make you more cash flow if that's what you want to do. If that's what you want to do. Okay. Listen, I really hope this video has helped you. Yeah. When people get fearful, they freeze. When they freeze, nothing good happens, right? You got to learn the actual facts, not what the media are using to sell papers. Learn the actual facts. I believe this gives you some key underpinning facts, right? Learn the actual facts and then make a decisive decision, right? Get off the fence. And I encourage you to get off the fence and buy. I encourage you to be controlling asset. And even if that asset goes down in value, it's going to go back up, right? And in the meantime, you get great cash flow. I'd rather be in than miss out on that. And those of you thinking, I'll wait for what? Wait for what if it goes up another 10% while you wait and then drops 5? Will you then go, oh yeah, I'm glad I waited? Because you've missed out on the cash flow throughout that period. And actually it's gone up a net 5. You want to be in the game. You want to be controlling asset as soon as you possibly can, in my opinion. Okay, thanks for watching this video. I really appreciate you spending the time to have a look. By the way, if you like my content, if you like being around me and being around what I share, or I've resonated with you in some way with what I've just shared with you, I'd love to invite you to spend 2 days with me, right? For free. I know that's crazy, 2 whole days for free, just with me, okay? But I'd love to invite you to one of my free 2-day events. Somewhere around this video, there'll be a link you can click, or just have a good look around. They may even manage to embed it, I don't know. But just have a look around the video, maybe just down below it, okay? And click on that link and you can see when I'm next running a free 2-day event. And I'd love to spend some time with you. That 2-day event, I'll cover the 10 key areas you need to master to an 8, 9, or 10 to successfully invest in property. Most people, even intelligent, articulate people, have 1 or 2 of those missing. Some have loads missing, and then they wonder why they fall over along the way or never make it, right? So there's 10 key areas you need to master. I'll be covering the 5 core strategies. What are the 5 core strategies that consistently help people to get financially free? Consistently, right? I don't mean a one-off year. I mean people making 100 grand a year after year after year from one of these 5 core strategies. By the way, it's not one size fits all. You know, the property industry would love you to think, oh, buy this course or buy that course or buy this course. No, work out which strategy is best for your unique circumstances, your person. Where are you starting? Where do you want to get to? What's best for you? And then become brilliant at that strategy. So I teach what those 5 are and I help you choose which one's right for you, right? I teach how you can take a buy-to-let or a flat, a 3-4 bedroom property and make £10,000-12,000 a year of profit from one of those, right? I teach how you can buy one property, one single property, right, and make 30,000 a year of profit. I'm buying loads of those right now. I've got loads of those already, right? And you can do exactly the same, and I can show you how to do that. 30,000 a year of profit from just one property. I'll teach you how to be tax efficient, income tax, capital gains tax, inheritance tax, efficient across all the piece. How to start a portfolio with 1, 2, or 3. How the heck do you get to 8, 9, or 10? How do you build that through? And loads more. We'll cover mindset. I'll teach the 4x3 plan. If I'm sitting with the best friend of mine this hour and I've got an hour, teach me how to get financially free in property, I teach that 4x3 plan. That's it. That's what I teach them. I'll be teaching that to you as well. So have a look around here, look for the link, okay, and join me at my free 2-day event. My free 2-day event. I'd love to help you. I'd love to work with you. And I'd love to help you move forward, okay? Also, you'll see another link somewhere around here where you can just subscribe to my list. If you're not already on my list, you can subscribe to the list and you'll get videos like this and information like this. You know, as this market keeps changing and moving, it's really important to stay on top of it and get the information from someone you feel is balanced rather than an extreme one way or the other. So if you'd like to stay in touch with that information, again, just click the link that says join Aran's list, and we'll just send you the information. Just unsubscribe if you want to. I'll just send you the information about what's going on and different webinars I'm running on cash flow strategies and tax and other things like that, just so you can keep abreast and on top of everything as we move forward. So listen, I hope this video has been useful. Bottom line, property investing is awesome. You can get some amazing results when you invest in property. And I really, really want you to get amazing results. I really, really want you to move forward. I don't want it to be, I thought about this 10 years ago and I never went and took any further action. Okay. Bottom line, invest with knowledge, invest with confidence, create financial freedom. I'll speak to you soon. Thanks ever so much for being here. I'll speak to you soon. Thanks. Thank you.